This is Prasanna from the Department of Commerce, Auxilium College. So, this video is about the holding company accounts. What is meant by holding company? What are all the steps that are involved in preparing holding company? What are the points that we need to keep in mind while solving the problems under this holding company accounts? So, first we'll start with the meaning of holding company. So when the company is acquiring or taking the shares from some other companies, there we use the term holding company. So here holding company and one more thing is subsidiary company. One who controls the company will be calling as a holding company, and the company which is controlled by some other company is called as subsidiary company. For example, if you take we assume that there are two companies. One we name it as A and B. Company A is possessing 10,000 shares and company B is having 6,000 shares. Suppose we take, if company A is acquiring 4,000 shares from the company B and the majority of the shares have been acquired by the company, that is company A. So here company A will be the holding one and B will be the subsidiary company. And now we will move into how we can solve the problems or the thing under this holding company and how we are going to prepare the balance sheet, consolidated balance sheet as per the new schedule 6. We need to have certain points and things before moving into solving the problems. These are all the six steps that is involved in the preparation of consolidated balance sheet. First, we need to identify the holding and minority ratio. It is nothing but how much shares have been acquired by the holding company and remaining how much shares is moving to the general public. So this ratio is very important because based on this ratio only we will ascertain the profits, we will allocate the capital, revenue, even the minority, all other workings will be done based on this holding and minority ratios only. So we should be very careful in finding out the ratios of holding and minority. After that, we need to ascertain the capital profit as well as the revenue profit. So capital profit, it is nothing but the profit which we earned before the acquisition is called as capital profit. And revenue profit is after the acquisition, but all the profits we are enjoying, that will be called as a revenue profit. So we have formats in finding out the capital as well as the revenue. After finding out this, we need to allocate, after finding out the capital profit, we need to allocate those profit on the holding and minority ratio. The same thing will applicable even for the revenue profit also. After completion of third step, we will move to computations of the minority interest. That is nothing but moving to the general public. Suppose if the 6,000 shares been taken by the holding company, remaining 4,000 shares will be to the general public. So their interest will be calculated in the step 4. And again, we have a separate format for that. And the next step is we are going to ascertain whether we are having a cost of control or goodwill. What is the difference between cost of control and goodwill? If we get the figure in an positive value, it is called as a goodwill. That is, based on this one, we have earned something extra. We doesn't have any negative thing. If it is in negative, we consider that as a reserves, and that is also called as a cost of control. So whether we will ascertain we are getting the answer in a positive figure or in a negative figure in step 5. And step 6 is about finding out the provisions that is related to unrealized profits in stock. This is something ascertained based on the information that is given in the question. They would have make some purchases during the transactions or in between. What is the percentage that is allocated at the time of purchasing the goods? Whether we are earning profit on the purchases will be ascertained in the step 6. And now we are moving into the formats in finding out the capital profits. Okay. We need to take all the reserves. capital reserves, general reserves, and other all reserves that is related only to subsidiary company. While doing the workings, we should not touch the holding company amount which is given in the question. So we'll take only the subsidiary companies, capital reserves, and all other reserves, as well as the P&L, that too on the date of purchase of shares. And if we have any other bonus share issued from the capital profits, or if they are paid any dividend, that has to be taken back, add with the bonus, and we need to deduct with the surpluses from the previous. After that, if we have any during the year profit, that is also called as current year profit, that we will add back. And if we have any revaluation of assets is nothing but ascertaining the value of assets and liabilities again. If we have profit, we will add back. If we have loss, we will deduct it. And if we have capital expenses given in the balance sheet, again we will deduct. After doing all these workings, we will able to analyze the capital profit. After finding out the capital profit, we will take and allocate that in the holding and minority ratio. And revenue profit most probably will have it in the question in the adjustment itself. After the date of acquisition terms they will be using, and it will be given in the question. So we need not worry about the revenue profits. Then we'll move to the minority interest computation. Minority interest computation. What is the face value of the shares? For example, like previous thing, if I said the 4,000 shares is moving to the minority, the 4,000 shares into share per minority share per value will be taken. And if it is of equity, preference, all the thing, same one. Minority shares of capital profits that we have allocated in the ratios, isn't it? That one. And the revenue profit minority share, if they have issued any bonus, even that will be taken, adding everything. If we have any losses, we have to deduct. At last, we will ascertain the minority interest. And the next one, how we will ascertain the cost of control or goodwill. We will take how much amount we have invested or we have paid in purchasing the company's shares. That amount, if we have any capital loss from the holding company's shares, that will be add back. After that, we will deduct the value of the shares that is purchased, nothing but the face value. If we have any capital profits of the holding company, yes, of course, we will have that which we did in the working notes, that one. Then holding company's bonus shares allocation, and if they have paid any dividend that belongs to holding company. So all these things we will take, we'll add back and deduct the previous one. From the term, if we get the figure in a positive, it is called as goodwill. If we get the answer in a negative, we can ascertain that as a capital risk. After completion of all this, and the next step we have seen is ascertaining the provisions of valuation of profit in the stock. So based on the percentage, like 75% of the stocks have been taken, 25% cost plus, all this information will be given in the question. So as per that, we will complete that procedure also. After finishing all the workings, we'll move into solving the problems. Before moving to solving the problems, we need to have the note to accounts, and it is also consists of 9 different schedules. So schedule 1 is about the share capital, which we have it in the question transaction itself. And when it comes to note to accounts, all the details that is related to holding companies alone we need to take, not related to the subsidiary one. And sometimes we'll take both subsidiary as well as holding based on the items which we have taken. But all the things which we have not used in the workings, we will take both holding as well as subsidiary while calculating the note to accounts. Share capital, we will have both holding and subsidiary, reserves and surplus. If we have profit of the holding companies, we will add it back. If we have any negative losses, we will deduct. And provisions of unrealized profit, of course, it has to be deducted with the reserves and surplus to find out what is the actual surplus we possess. Next, long-term liabilities, again holding and subsidiary together. Trade payables, which we have in the transactions, again holding and subsidiary together. Tangible assets, the values of both holding and subsidiary. Intangible goods, again the values of both holding and subsidiary. Stock, all the unrealized profits provisions that will take into the stock. While if we have the separately we will having the value of the stock, and that value of both holding and subsidiary had to be add back, and that has to be deducted with the provision for unrealized profit. Then trade receivables, there we will have some workings based on whether it is outstanding or mutual. If they have mutual obligations, the treatment will be totally different. Then other current assets, what all the things which you have not included. So with all these things, we'll prepare the note to accounts. After preparing note to accounts, now we are coming to the final part of this holding company accounts, preparing the consolidated balance sheet as per the schedule 6. This is the new schedule format. So equities and liabilities, under the 8 equities and liabilities, we will have the share capital, schedule 1, reserves and surplus, minority interest from the working notes, all the short-term borrowings from schedule 3, and all the trade payables from schedule 4. So we'll add all these things. We'll get the final total of equities and liabilities. Then assets, all the current assets, like tangible and intangible, schedule 5 and 6, the stock from schedule 7, trade receivables from schedule 8, and other current assets from schedule 9. So if we add back all these schedules from 5 to 9, we'll get the total, and these total from the equities and liabilities and assets should be of same in order to find out the correct value of the problem. So with the help of all these steps and all the note to accounts preparations, we can easily consolidate the balance sheet as per the new schedule 6 of holding company accounts. Thank you.